I'm going to show you how you can cash out on your home to pay off your bills. Pay off those high interest credit cards, personal loans, student loans, car payments, all that stuff. I'm going to show you how you can use a mortgage to wipe all of that out, even if your credit score is under 600. So first of all, my name is Jason Eichmiller, and along with my partner Frank, I own and run Key Home Lending and What the HELOC, this channel. If you'd like to get in touch with us, if your score is low and you just need some cash to pay off the bills, then you can reach out to us. You can go to just www.whattheheloc.com, or you can email me personally at jason@keyhomelending.com, and either Frank or myself will take care of you. So go over a client of mine who we just did this strategy for her. We just closed her 4 days ago. It's awesome. So happy for her. So she was in a really stressed out position. She was free and clear, by the way, didn't have a mortgage on her house. And she'd originally been referred to me by a mutual friend, a realtor that I do business with. And she had just, she gave me, on our first call, she told me what she owed. She gave me the credit card balances. She told me about the interest, which just made me want to puke. And she said that, hey, she was making good money, but she was spending so much of her salary on just keeping the bills afloat. Because you know how it goes with minimum payments. You make a minimum payment, you're never paying this damn debt off. It's just not going to happen. So she was paying the minimum payment, maybe a little bit more, and it was it was more than another house payment, way more. So what we did was we got her a cash out refinance. And now, again, I'm going to tell you, we got her a cash out refinance when her score was under 600. So you might ask, can she do a HELOC? Can you do a HELOC in that case? The answer is no. Remember, I'm always going to tell you the truth about this stuff, good or bad. If your score is under 600, then you cannot qualify for a HELOC on your primary or your investment home. But you can qualify for a cash out refi. So what we did for her is we got her the cash out. We only gave her enough money to pay off her bills. She didn't want anything more. She didn't need any more money. She's doing all right. But she was just every single month when she opened up her bills, not just one, but like 17 of them actually, she got disgusted. I don't blame her. I looked at the interest. It was, geez, half of the cards were in the teens and the others were in the 20s. It was terrible. So we just, through the mortgage, very simply, we paid everything off. And then what happened to her? So my new friend, we are friends now, she saved $1,593 a month. So what does that mean? What's that over a year? It's $19,000 in a year. Now, a residual impact of that is that the mortgage payment that she is making, well, she's going to be able to write it off now. Whereas before, when she was just paying the loans and the cards off, or not really down, but making the minimum payments basically on them, she wasn't able to write off a damn thing. Now, all that interest, everything gets written off. Pretty neat. So she's saving a lot of money, $19,000 a year. She's writing the interest off. And one more thing. The reason why I'm saying that she just saved $19,000 a year and I didn't go into the 2-year and the 5-year and the 10-year example is because we're just going to refinance this puppy. So what's going to happen with her is now that her cards are all paid off, her credit score is going to shoot. It's going to shoot through to the moon, to the sun, to the stars. It's going to be crazy. So her score is going to completely rebound. It's going to go from the 580s up to maybe the mid 700s. I don't know how high it's going to go, but it's going to go drastically higher. And now this depends a little bit on the market. So if rates stay the same or they get a little bit better, which by the way, we're projecting them to. If that happens, we're going to be able to save her at least 1%, and maybe 1.5% when we refinance her next year or the year after. Again, whenever it's smart. I can't tell you exactly when we're going to refi her. because we have to see where credit rebounds to, and we have to see what the market rates are at that time. But mark my words, we will be able to refinance her in at least within a year, maybe a year and a half, depending on what's intelligent, what the numbers tell us. And then she's going to save about a point and a half on that. And that's when that's when the real savings kicks in. Well, no, the real savings kicked in. She's saving $1,593 a month. That's pretty real. But then we're going to kick her mortgage. She's going to save even more money than that. So that's really exciting for me as a guy who does that, just to know that you're just the money. That's all it is. It's the money that you're giving somebody, but it's making that drastic of an impact on somebody's life. So if you're in that situation, if your score is low, but you just have this debt that's just riding on your shoulders, and it's just dragging you down like crazy, then feel free to reach out. Again, my name is Jason Eichmiller. My partner Frank Vaccaro. We both run What the HELOC. You can go to, if you want to schedule an appointment, you can go to www.whattheheloc.com. Or if you just want to get on the, email me, you can email me at jason@keyhomelending.com. Jump on the line, 888-309-9705, and we will do our absolute best for you. All right, that's all I got. Just wanted to share my friend's story because it's so powerful. And just know that if your score is low, but you're making okay money, and you got this debt that you just want to get rid of, give us a shout, and we'll do our best to help, and I think we can help. All right, take care of yourself.